Imagine you just woke up and realized you lost $10 million of other people's money before you even finished your coffee. Welcome to your life as a hedge fund manager. To understand this, we have to explain it like you're 5. A hedge fund is just a giant cookie jar. But it's not your cookies. It's the neighborhood's cookies. They gave them to you because you promised you could turn their 10 cookies into 20. You don't start at the top. At rank 1, you're the junior analyst. Your job? Staring at 1,000 spreadsheets a day. You're looking for one tiny mistake in a company's numbers. If you find it, you're a hero. If you miss it, you're fired. Now you've become a portfolio manager. You finally get to push the buy and sell buttons. You aren't just looking at data anymore. You're making bets. Big ones. You use something called leverage. Think of it like buying a $100 toy with only $1 of your own money and borrowing the other $99. If the toy's price goes up by $2, you just doubled your money. But if it goes down by $2, you owe the bank everything. Now you've reached the level everyone wants. You own the fund. You've mastered the wealth rules. You don't even have to pick the stocks anymore. You get paid just for the cookie jar existing. It's called the 2 and 20 rule. You take 2% of all the cookies just for managing the jar and 20% of any new cookies you make. At $100 million, that's $2 million a year, even if you do nothing. But here's the secret. The algorithm doesn't want you to know. To stay at rank 3, you have to reprogram your brain. Most people fail because they get emotional. When the market crashes, they panic. You have to be like a robot. In the world of big capital, the person who stays the calmest wins all the cookies. You just experience the life of a $100 million hedge fund manager. But what's it like to be at the bottom of the financial food chain? Next time, we're doing POV. You're a debt collector. Subscribe to POV Capital so you don't miss your next rank up.